Good morning, everybody, and happy Tuesday. Hope you guys are okay and survived yesterday. Everyone being very long tech, I'm sure left some damage with some investors, but we will look at this here in just a couple of minutes. I'm going to quickly just check one or two more things to make sure the stream is running, and then we are going to go through our morning points here. And as usually, if you guys can hear me, just give me a quick yes in the little chat box there. If you could, that'd be awesome. And then we're going to get going here in just a second. Good morning, good morning. Before we get started, I just want to make sure that everyone has a chance to subscribe to the channel and to give us a thumbs up like. That really helps us be able to continue doing this, and of course allows you to be able to be updated when we go live with our analysis. So here we go. It's 2 minutes past the top of the hour. I would say let's get started. Again, good morning, everybody. If you're here for the first time, I'm Serge Berger from The Study Trader. This is our morning show. It's called Set the Market, and what we do is we go over sort of the top of mind things from our desks, and share them with you here in about 10 to 15 minutes. So where to start? Well, in the very, very near term, in terms of what happened yesterday, here is a chart that I show in our Set the Market in our chat room, I should say. And the chat room is called we just renamed it. It's called Trade Ops. This is a chart that we show in there every morning. This is a 5-minute chart of the S&P 500 and basically highlights the gaps. And the reason we want to be aware of those gaps is because there tends to be a lot of attraction to fill those gaps. So yesterday's down gap is actually this one here at the top, and then you can see we have a couple of gaps below. The arrow there, I'm going to actually make this arrow a bit more red, because that was yesterday's down gap. And so with yesterday's down gap, we essentially immediately filled an unfilled up gap from last week Wednesday. So now we're kind of sandwiched right in between two gaps. Yesterday's down gap, which this morning we are pre-market here. Let me look at the futures quickly. We are S&P futures are up 16 basis points. That hardly counts. So we're basically have most of yesterday's down gap still to fill. If we break below yesterday's lows, there is, and again, this is very near term, so I'm starting here with this first. There is a gap below that goes all the way to about 591, where we could go to. So that's, again, very, very near term, and I think for perspective helps, because we're in a pretty volatile market, as you can see, and we keep talking about this being a year of the trader, and so volatility is indeed picking up. It has picked up, and so that's kind of where we are. Now, what's really interesting, and this is honestly, I think, most important to understand here, if we look at yesterday's price action, and I can show you this on the Market Rover, we're going to, right after this, move on over to the Market Rover member session, which is going to take place in about 10 minutes from now. What I can show you yesterday, we actually had, I think, 70+% of stocks yesterday in the S&P 500. You write this down. 70% of stocks yesterday in the S&P 500 were actually up more than 2% on the day, right? That's something that is mind-boggling to most people, because most people yesterday lost money. Not everyone. I'm sure there's people in here who did well. Most people really got it handed to them yesterday. Why? Because those those few names, those few tech stocks, Nvidia in particular, which is still 6% of the S&P, by the way, are so huge. In fact, yesterday, Nvidia came in as the largest market cap stock in the world, or certainly in the US, and it ended up the third largest by the end of the day, because it was down, whatever it was, down 17%, whatever it ended up down at. So that's, I think, extremely important to understand. So if you look at our Market Rover, and again, we're going to move on over to our Market Rover member session in about 10 minutes from here, or 15 minutes from now. And you can see we actually got a ton of buy signals yesterday, which is interesting, right? You wouldn't think that. In fact, pages and pages of buy signals. And that's because the S&P 500 yesterday actually saw most of its stocks up, not down, but because of the heavy weighting. So that also makes the S&P 500 less of a reliable benchmark to use for portfolio purposes because it is so heavily skewed. And it just makes it a really not a good barometer to use in many ways anymore. Outside from a trading perspective, trading the S&P, that's a whole different story. That's fine. Just keep in mind you're trading tech. You're trading 3 names, essentially, is what you're doing, which is great, right? If we can get the directionality of those names right. So let me see what else. So in terms of right now, so what I mentioned yesterday is that once we get through the initial reaction of the tech sell-off yesterday, and I do want to get to the Nvidia chart in a minute because I know everyone probably wants to know, I did say that we're likely going to fall into a consolidation phase until we get through Wednesday. On Wednesday, we of course have tech earnings and we have the Fed in the afternoon. So I wouldn't be surprised if we settle into some sort of a consolidation phase. Does that mean we can't fill yesterday's down gap to some extent, or fill the unfilled up gap from Friday the 17th of January? Oh, of course we can. But just keep in mind that real big volatile moves outside of some other unforeseen news are now a little bit less likely after yesterday's move, which now has to be digested, and again, Wednesday being a big day for news, both from an economic perspective and on the corporate side. Which gets us to Nvidia. So yesterday we opened up the conversation here in the morning and in our Set the Market show, and we talked about Nvidia having that line on the screen that you see, which is the 150 period moving average. And I mentioned that being important because clearly it has held as support and bounced off of it most gracefully since October of 2023. So that's now a year and a quarter ago since it's been doing that. And so the algos care. Well, yesterday the stock snapped that level or that line. It also actually broke below the 200 period moving average. I find that less important, but it did as well. So, at this point, this is more of a sell the rally type of stock. I'm probably going to stay away from it, to be honest with you, because it is just the S&P 500 in many ways. It just levered, and I don't necessarily need that. So I think the stock is broken for the time being. Earnings late February. Who knows what happens then? Maybe, Jensen starts, instead of wearing crocodile, starts wearing kangaroo jackets or something. Whatever, it's become a bit of a shit show, to be quite honest with you. That does not mean there isn't a long-term story, but there's a lot of hype around it, and I think there's some people that bought the X-levered and Nvidia ETF the other day and are now basically lost 50% of their trading accounts. So this is the stuff we always talk about, that is no way to trade. And the fact that we heard crickets from clients yesterday tells me, sadly, that they didn't listen to us saying that there's going to be volatility and it's going to come unsuspected in Nvidia. So hopefully we're able to give you a little bit of help you as much as possible. Those people willing to listen to process-oriented way of trading and investing have been well served. Let me just move to one more thing here, and that is the Dow. And so this is just an incredible chart in many ways. And by the way, the Dow too keeps holding its 150 period moving average very well. But the Dow was actually up yesterday, 70 basis points, and an outside reversal day, which is in many ways crazy if you think about it. But then again, it's just tech that went down yesterday. And so, again, it reinforces this highly concentrated, bubble territory we have from an exposure perspective, not valuation, although I think valuations are stretched too. But the fact that the Dow is up, which, some people would call those value stocks, some of those at least, tells you that money is very giddy. And this is a big, big point. Let me actually annotate this and put this against NVIDIA just for fun. There's a lot of money that I speak with that is pretty giddy, very giddy actually, to move out of NVIDIA. Not like to sell it down completely, but to reduce the position size. And if you think of a fund manager, this is what happened yesterday. You can see NVIDIA and the Dow completely decoupling yesterday. The Dow up, NVIDIA down. So a lot of fund managers I speak to have been waiting for an excuse to sell down their NVIDIA position. Not completely get out of it, that's not the point, but to reduce it because it's become so overweight. The reason they needed an excuse to do it is because their investors pushed back at not being, overweight the one stock that's doing so well. Ironically, NVIDIA actually hasn't done anything since last summer. I know a lot of people don't want to hear that, and people get pissed when I say it, but it's a fact, right? And so now it's actually, it's right back to where it was in early June. So fund managers have been looking for an excuse, but haven't been able to sell the stock because they get pushed back from investors. That's the gambling bubble that I say we live in, right? And so now that the stock has broken, at least in the near term, right? This is not a long-term negative call on NVIDIA. I would not do that. That's a silly thing to do. But now that it's done that, you could see more investors reduce their positioning, sell some of their NVIDIA because they couldn't do it before. Does that make sense? Does anyone have any questions, or otherwise we're going to be good to go here? Again, I would watch, obviously, NVIDIA very closely. Let's watch these gaps. We're going to follow them in the chat room. And if you are an Inner Circle member and you use the Market Rover, we will see you in about 5 minutes. And we have a whole bunch of things to go through, new setups straight from the Market Rover in a whole array of different parts of the market, which held up very well yesterday as opposed to the technology stocks. So that's it, folks. Short and sweet here. Not a little bit, just about 15 minutes. Call it 13 minutes or so. Hope it was helpful. See you guys back here tomorrow morning. Again, Inner Circle members will see you in about 5 minutes inside our member session. And after that, we'll be in the chat room, in the Trade Ups chat room, and look for opportunities throughout the day there. Thanks for joining. Please subscribe. Give us a thumbs up, like. It really helps us. And, of course, it helps you to be in tune in real time when we go live. See you guys back here tomorrow. And members, I'll see you in a minute in the chat room.